righty, Doctor from North America. Good morning, good afternoon, and good evening. What do we got going on here? Europeans just lowered their interest rates. That's cool. Can't complain about that. That's a positive. It shows you where we know our Federal Reserve is. I mean, that's what their objective is. They're going to do the same exact thing. They're going to lower interest rates, more than likely a quarter point. Everybody feels comfortable with that. And then there's those that want to have a cut that's even more dramatic. To me, it seems like it's a waste of time. Especially with an election year coming up, that type of thing. It says to me, why do we need to panic? That's what it really comes down to. Why do you got to panic? It's always a sledgehammer when it comes to the government trying to make a decision. Probably one of the good things about Mr. Trump is that he wasn't a sledgehammer when it came to making policy. He was a sledgehammer against people who defamed him and lied about his policies. That's the real thing. A lot of people can't differentiate between one and the other. It's unfortunate. But at the same time, let's see where we at here. Oh, there we go. Chris King, can we look at GBP, please, boss? So, yeah, let's take a look at the GBP. Let's see, what's that say? Let me get my glasses on here. It says here, boss, so glad I found your channel. The teaching is uncomparable, I tell you. Cool. Well, that's very good. Chris, I think that's a real nice thing for you to say. Let's get, I don't even hear my, where's the, oh, there it is. Let's make sure I hear my voice. There we go. All right, now let's get the cable up on the screen here. I found it interesting, the panic in the cable when they thought there was going to be a civil war, which is kind of weird and funny, but, in the sense that a civil war in one of these modern societies seems to be very rare. And it was interesting to see, there it is right here. It was interesting how the cable went on this glide path down from it. And then when they realized after the election, no problems there, you could see the lift right back up again. And now this mild sell-off in here doesn't, is not as dramatic as this long, steady glide down. Now we're in a daily sell now for 4 days, but we're in that weekly buy over here. And you can see the green line and the histogram, how strong it is above the zero line. You can see it's above our manifolds, what we call our nonlinear time manifolds. They're basically a standard deviation, like a Bollinger Band. And that's why there's times where you see a Bollinger Band on a chart, someone looks at it and they go, hey, I'd like to see how that looks relative to a Bollinger Band. And I go, sure, no problem, because it's a standard deviation, just like what John does. John Bollinger did with Bollinger Bands. It's the same thing. And we used to talk about it, John and I, many decades back. And, I used to do a TV show with him. He had this show, it was called The Guru Review, which kind of ties into what you said, the nice things you said about me, about how teaching or explaining markets very clearly. You can't see what I'm pointing at. Let me go straighten that out, too. Where's that mouse at? There it is. So here's cable. And this is what I was talking about. That long glide path went right before the election, talking about civil war and all that stuff. And then once it was over with, look at that. They took it, made new highs right there. And you can see right now, as much as it's pushing down off and on, you can see, 3 days in a buy. And then there's 5 days and now 4 days. So at 9 out of the last 12 days, it's been in a sell, but it really hasn't gone too far. It's not even challenging the top here. And at the same time, as I was saying before, you can see the weekly, above the zero line. Let's put the zero line in there too, like this, to make it a little bit louder. There's the zero line right there. Very bullish. At the same time, the fast algorithm has backed off and is, moving dramatically down and actually getting towards an oversold point. And the bigger question is, when we go back and look at when it does that, obviously when it turns back up, it usually shows strength. So, we're looking, we're in the weekly buy. You can see the fast algorithm. Let's move this zero line down there. You see it's down here, and it's bouncing around. That's back in, I guess that's back in April of last year. No, this year. I'm sorry, April of this year. So you can see we're becoming oversold on a week-to-week basis. At the same time, we're still in a weekly buy, and the fast is oversold. So, in other words, if they start to flatten that out like right there, the way it flattened out back in August, and it starts, at the end of July going into August, if it does that, we're probably looking for another bottom like this that will take the market up. And then I have what that does is it puts a lot of ideas in my head. A lot of what's the best way to describe it? Classic. When people say certain things like like the rain in Spain lays mainly in the plain type of things. In other words, anomalies, homilies, or there's a word for it. But what happens is that there's this consistent thought from old Wall Street days that says, if it's being oversold here, in other words, never short a dull market. There's an example. That's one. There's a bunch of old Wall Street sayings, and business sayings and trading sayings, that type of thing that usually has real validity. Makes sense. It is real. And so in this case here, hey Robin, how you doing? And so in this case here, you can see cable is trying to build another bottom. And and I think that's really what we're really looking at the moment. I think that's what we're looking at, and especially with the fast algorithm, the blue dashed line, which is much more faster than the green line. It's already down below the zero line. It's through the manifold. It's like that's oversold, and so when it starts to turn, since it's the fast algo versus the slow algo, with the slow algo still up in a buy, there's going to be some strength kicking out, and so the way it looks to us is that as long as we're in a weekly buy, and we get into some daily buys that have some strength. Matter of fact, what's interesting is this last one. It went into the buy here at 1.3147, and it ran up to 1.3239. So that's a pretty good jump. Almost a full handle in 3 days. It shows the strength. There's buyers out there. They want to buy. They're just looking for a reason to buy. And remember, money managers need a reason to buy. They just don't, just because they have a big pile of money doesn't say they go out and buy. They need to follow the manifesto of the incorporation that created their fund. And if they don't invest the way that manifesto says, that incorporation says, they get in trouble. They get in deep trouble. They'll get sued. Doesn't matter if they're making money. They'll get sued. And, because it's a lot easier for a lot of people to sue to make money than to trade to make money. Not here, but, there's a lot out there. There's all kind. In other words, markets are full of all kinds of people. Smart ones, stupid ones, wealthy ones, poor ones. There's all kinds of types of people out there. Option derivative, rocket scientist types, and just buy and hold. There's all kinds out there. That's what makes a market. So, Chris, I hope I made some sense there, and that I stayed with the natural characteristic of always trying to be accurate and informative at the same time. All right, where were we? Let's go over and take a look at the dollar index. I think it's still up again today. There's a dollar. We have it up on the beta right now too. So there's the dollar index. Okay, what's that? They gapped it down because of the No, that's Donald Trump stock. That's what that is. That's at Truth Social. There it is, right next to it. There we go. And you can see it's weakening a little bit because of the 0.25% drop. Yesterday, they're moving down, and then all of a sudden, the interest rate picture shifted. And when the interest rate picture shifts, in other words, when they think that interest rates are going up or down, it has more dramatic effect. So in this case here, you can see, it's lifting, was lifting up. Now it's backing off after the 0.25 point drop. Now they're thinking, well, the United States is going to drop it also at the same time. And you can see it. Let me just throw something else that's kind of interesting. You can see it looking at the bonds themselves. We'll go over to the vigilantes and see how they're doing. I like the vigilantes myself, but that is what it is. Okay, and then here it is right here. Let's throw it up on the screen. Here are the live interest rates as we speak right now, right there. And you can see, you have the 1 month trading at 5% right there, and you have the 2 month at 5%, and then you start to drift a little, 3% starts to drop. They're anticipating that 0.25 point drop. That's what they're doing. And then you see the 1 year is almost a full percentage point lower than the 1 month, basically. I mean, that's pretty dramatic. There's the 1 year at 415, and basically the 1 month is at almost 5.1. It's 5.095, very close to being 1. So you can see right there, there's a full percentage point drop in 1 year. That's 12 months, and we're anticipating at least 4 cuts. So that they're putting it into the bond market. You can see that right there. Then you can go and look at, now what's interesting more, why I put this up on the screen. Here's the 2 year right there. Okay, 2 years trading at 362, and the 10 year is trading at almost at 362 now. And you can see in between there's a 3.4, 3.4, 3.5, 3.6, and then what's interesting is the 30 year is back underneath 4%. So they're starting to anticipate a better interest rate environment, and you can see it in the bonds. You see it in the bonds. You go over into the British gilts. You can see it right there too. There's a 2 year at 378. And you can see the 5 year is lower, and then the 10 year is almost at parity with the 2 year, and so the 30 year is very chill also at the same time, but it's a little over 4%. And then you can see here there's a German bonds. This is the Bund, and you can see here the 10 year. They don't have any real short terms, which is curious. I'm not sure why they're not reflecting them, but you can see there are 2%ers all across the board. They're trying to keep the inflation, or not the inflation, but the interest rates lower. That's the answer to one of the ideas that appears in my head from conversations with traders like you and everybody else. The evidence is out there, and the real trick is just looking at the evidence. That's what it comes down to in the end. So, I was reading an interesting story about gold. I guess it was last night. It was very fascinating. They were talking about how they looked at the history of the Federal Reserve and how poorly it has functioned, and how much they were thinking that what a real mistake it was to create a monster like that. And it was just an interesting story, and how people mostly are unaware of the physical mechanics of the market. That's what I try to show you, is there's actual physical mechanics to the market. So when you're looking at a market, it's more than just, it's going up, there's the earnings. There's the inflation around it. There's the management of the company itself. There's the policies of the government, whatever country it's in. There's a lot of mechanics to it. There's cyclical nature to it at the same time. In other words, taxes When people were having to pay taxes, and people need to sell things they made money in, and then at the same time they're trying to also sell things they lost money in and offset the profit to the loss. So there's a lot of magic and a lot of mechanics. It's more mechanics than it is magic. Let's put it that way. But it's always well worth having that conversation, as far as I'm concerned. So, anyhow, from there, let's go back over to. Let's see. Let's go like this. Where are we at? Here we are. Let's go to the other screen. Right there. We'll take a look at the euro. See how the euro is doing this morning. Now the euro has been, I think it's been underperforming again to the cable. And you can see there's the euro. It is lifting up today. We're getting a little volatility signal, and you can see it's trying to get through the zero line there. And it's a constant battle going on, I guess you could say. It never seems to end. And so when we go down and look at the Euro GBP pairs trade right there, you can see it's just on the edge. It's been trying to figure out where it wants to go. Went into the sell up in here. See the fast broke down. Now the fast has made that low and is cutting through the green line. And what do you see? The fast really can show you overbought and oversold when you're looking at it relative to the slow algorithm right there. And then the manifolds set a spot in space that you can measure it by. I mean, that's the whole name of the game to begin with, is to measure it, and that is the challenge all the time. To measure something, a relationship versus another relationship. And so when you're, like you can see here, the fast got up in here, started to break down on the slow, started coming down hard. What do we get out of it? A lot of weak movement. Is it consistent? As long as it keeps on dropping each day, yeah, it's consistent. Then notice it puts a bottom in right here, where we're going into the slow weekly sell, and it starts to take off and gets through the green line here. And what do we see? We see strength. And so that's why we watch the slow versus the fast, always having something to measure against something else. It's just the nature of the math in general, all math, having something to measure against. And that's really the most important thing of all, is to be able to have something consistent to measure against. And that's where we stand with that. I just want to export this to our platform. We do have the beta, as we've said. We're getting that thing more straightened out. We'll show you a picture of some of the stuff on the beta. Yes. And then let's just do this. Put that there. And put that in like that. And upload it. Now let's go over to the beta. And then we'll go back to the currencies. Because I just want to show you that relationship that I'm talking about. And that's important. Trying to make things understandable and easy. That's the way we work here with the trading. So in this case here, you see the gold right there. It's trying hard to get out of this weakness. And you can see we had all that weakness there. And then you can see, let's make the chart bigger. There we are. And you can see now it's in a second day of a daily buy. And it's trying to lift up even more. There it is right there, right now, live. And you can see at the same time. Now, in this case here, we still are playing around with something here. The fast and the slow are these two lines right there. Okay? And the histogram is the fast. These are the slow algorithm, the weekly slow. And the histogram is the fast. We thought that would be interesting to see if we could, see if there's, a little bit better relationship. This is our beta. We're working on it, trying to make it better and better and better. That's what it really comes down to. So let's go over to the other screen and compare it. It's like I'm doing research simultaneously as doing a webinar. And that's the real answer to it all too. It's constant research over and over and over. It never seems to stop. And let's just show you it over here on the main platform that we use for trading. You can see that there, just consistently in a buy still throughout that whole thing, to compare it to the way the weekly right there doing the same thing in the buy. And then you can see here where it dipped, the slows dipped with the fast, and the fast is now the histogram on this one. Might reverse it back out just like it is on the other screen, but I just thought it would be interesting to take a look at it in reverse. Just thought to be able to see it the other way around. So in other words, here is the slow, the histogram and the green line, and then the blue is the fast. Over here we have it reversed. The two are lines on the slow, and the white histogram is the fast. All right. From there, let's go back over to the currencies, unless someone wants to see anything specifically, and we gladly show it to you. We have no problem with that. Let's go back to right there. And there was the Euro GBP. Let's take a look at the Swiss. And here's the Swiss. Right there, and you can see Swiss still losing against the dollar. You see the weekly sell has been a long while. You can see the fast has stayed underneath the zero line. It showed some strength here. It tried to bounce back up. You can see that, and you saw the strength there with it. And then it just kind of rolled over. Now, this is probably like for bears in this. It's trying to tell us that. Basically it's trying to tell us that it wants to lift even more, and that's why it's in a daily buy for 4 days. Now, the fast is jumping up. It'll be interesting to see if it fast gets up there, but the slow does not, and then the fast tops out as a short-term, very short-term overbought situation, and then turns back down again. Let's see, Chris, Doc. I've been pro traders for nearly 50 years. Oh, okay. Amazing. Amazing. What's happening? I like that. Yeah, traders, we're kind of, when you got this much experience, this is fun to do. Matter of fact, that's how I ended up doing the Dukascopy. Is 11 years ago. Some people were trying to come in here and trick people, and I started like, oh no, that's no, I'm going to show my math, and let's see. I'm going to show you my results. You show me your results live, not fake. Not. We had one guy in here who was trying to show us results, and he was changing the indicators, and you could read it on the screen that he was changing the indicators, and kept on refusing to put a live chart up there. And we kept on saying, I was saying it. It's like, why can't you put a live chart up there and show us it live? Oh no, it's just too confusing. And so, when you have, between Robin and I, we're a little under 100 years of experience in trading. And, when you have that much experience in trading, doing webinars is pretty much a fun thing to do. Because, we've seen it all. The good, bad, the confusing, the logical, the illogical, you've seen it all. There's, it's pretty hard to invent something else, it is unique. So anyhow, we appreciate your input too. It's nice to see people communicate ideas. Yeah. Oh yeah. And Passion, I like Passion's work too. Passion is always, I'm very pro Fibonacci. The Fibonacci sequence is something that we've seen now for, you can measure it in billions of years. Billions, you can measure it in billions. Not just millions of years, but billions of years. You can see the sequence in the expansion of galaxies. Those galaxies are billions of years old, and you see the Fibonacci sequence working inside it. So we find it totally fascinating. our math, is just a little bit faster than the Fibonacci sequence, which we kind of try to define it as a like a Schrodinger type of, the double slit experiment type of resource, I guess you could say. We see it as a consciousness, a mechanical consciousness, not an AI, not an artificial intelligence, a consciousness. And you can see, who is it now? There's a couple people out there playing around with ideas about that. Let me see if I can find it. Which screen do I have up? Let's go here. No, I think it's in my email. Let me see if I can find it. Right there. There's let's see, science. I have it bookmarked, and it's well worth looking at. Witten. Let's see, where is it at? It is what it comes down to is one of the Nobel Prize physicists is combined with a couple. I want to put it up on the screen so you can see it. And so, when you look at the Fibonacci sequence, like what what's his name, Passion does, it's a great tool. It is a great tool, and there's no shortchanging that concept whatsoever. Let's see, consciousness. Let me see if I find it. I got to go to YouTube. I want to put these faces up on the screen for others to go. You guys can take a look at it if you want to have a better understanding of consciousness versus where is it? Science, Witten. I thought I parked it in Witten, but I don't see it there. Lectures, topological phase matter. No. All right, it's in here somewhere. I'm going to find it in working videos, maybe. That's probably where it's at. Working videos. And it's I can't think of the physicist's name. He's kind of like very popular. Math proofs for consciousness. Let's see if we can get that up on the screen. That's interesting.
Hi, we're Visible. We offer one-line wireless plans with no hidden fees.
Where is it at? We're going to find this in a minute. And it's well worth, just looking at, in the sense of what's going on. And you can say that the Fibonacci sequence is a form of consciousness. It definitely is. I'm trying to find this group that you could look at. There's that one. This consciousness. I just bookmarked it on the laptop. I don't feel like cranking up the laptop to find it. I know I can find it on the side here, but I can say this about that, and that is that consciousness is something we don't totally understand, but we have seen it in scientific terms. And I'm trying to think of the Nobel Prize winning physicist that's teamed up with some people to look at it. And no, I think I spotted him. Is that it? No, that's not it. Just when I'm looking for this guy, I can't find him. We'll work on this. We'll find it, but it's a great tool, and I'm glad, Chris, you're bringing this up because let's see. Chris says I can't move away from Fibonacci. No matter what I do, I have to use Fibonacci. Oh yeah, most definitely. You found indicators to be great partners to your trading? Oh yes, most definitely. Well, we developed this. I developed this to try to understand the double slit back in the early 70s or mid 70s, to look at the atom. And when they legalized options back in 75, 76, and I went to the exchange back in 78, going into 79, that's when I started using that math to play with things, just to try to, because back in those days, technical analysis was called voodoo. That's what they called it, like a Haitian voodoo. They didn't really respect. I think something like, I remember back in the old days, something like 12% of the money managers would say that they use technical analysis, and at that time, Fibonacci was not used. There he is, Penrose. That's it. Here we go. Roger Penrose, the Nobel Prize physicist, consciousness must be beyond computable physics. And he teamed up with, now that, I want that one. That looks good. I haven't seen this one. It's 13 minutes long. So I'm going to put that, I'm going to just park it to the side. Done. And, this is, and let me just show you what I'm looking at here. I didn't see this one before. Right there. And so then when you look at the Fibonacci sequence, how it shows you the fabric of space itself, just like the double slit experiment and the Nobel Prize winning physicist Schrodinger, the one with the cat thing and all like that, the Copenhagen conjecture, shows there's a consciousness. And so, I mean, we all know when you're trading a product, I call everything a product. The euro is a product. The S&P 500 is a product. Oil is a product. When you're trading and these things follow the sequence, here's a good example. Let's go back to your look at cable. All right. And what we're going to do is we're going to make it a little bit wider here so you can see the bar charts like that, and then put the Fibonacci sequence in there, like here. Off a low, putting it to a high, right? And close that. And then at the same time, you can see how our math has an effect. Notice with that low, our math went into a daily buy, and the weekly buy started to take off at the same time. So in other words, you can see our math is connected, and it's literally ahead of the Fibonacci sequence. So you can see here where we get the top, what happens to the fast? It starts to break down. It's starting to read it. It recognizes it. On a daily basis, we go into a daily sell. It's connected to the sequence. Notice how it tops out at the 0.38, and here our math goes into a sell. In other words, you go down and do a retracement, and you break all, you do the 3/8, you do the 50, you do the 0.618, you go do the 760 extreme, and it comes in there, tries to put a bottom in. Our math turns, gives us a buy signal, underneath, breaking through the Fibonacci line. Our math is telling us that. And what do we get? We get a rally. And so this is why I like doing things live. I love doing things live because people like you ask questions. Remember, in trading, there's no stupid questions in trading or dumb questions in trading. All there is a short answer or a long answer. And obviously, you're seeing a long answer today about it all. All right, let me read what you're saying here. Doc, you're trading. Where are you showing this, Doc? Oh, shoot. Very good. Here we go, right there. There we go. There it is right there. So here you are. You can see. Now I put up the Fibonacci sequence right here. And you can see off that low in here. Let's raise it up a little. Let's move this down a little bit more. Move this one down a little bit more, like so. And then you can see it. Here it is right there. This is the Fibonacci sequence off of this low in here. Let's fix it a little bit better. Make it tighter, like so. And you can see it right there. And you can see our daily buy goes into a daily buy, bouncing off of this math at the same time, the 100% area. And then as you see it rises, and we're in that daily buy, we go into a sell here, and it hit the 0.38. Our math picks up on that. And believe me, our math has no relationship to the Fibonacci sequence. It is not in the math. But our math is subatomic. Okay? Now I'm going to say that again. Our math is designed to follow objects in subatomic space, in atomic space, basically. And so there is an example of the Fibonacci sequence being a part of the fabric of existence. And then you can go and look at, millions and billions of years. You see galaxies following the Fibonacci sequence. And so it's a part of our fabric of existence. And my math was designed by me to try to figure out how to measure atomic particles without an accelerator. I was an anti-accelerator person in the early 70s. And so, what is it? It's mind-blowing. Yeah, I know. Notice I'm always enthusiastic every day. It blows my mind every day. Especially when I know how it works. And I invented it. And, Robin and I talk about this for decades. For decades, we're talking about it. Ever since we traded on the Chicago Mercantile together. So, yeah. There's a fabric. That's why on my LinkedIn, how do I explain it? Let me just show it to you, how I explain it in my LinkedIn. I want to see this Penrose one. There's a couple of, now Penrose, and I'm trying to find another one. I'll find it for tomorrow if you want to come back and ask me again. Oh, here it is. I found it. And let me bookmark this. This is the one I watched, not the one that's just on there, and I'm going to show you. And this is very interesting. Let's go back to the beginning of it. Let me just go over here. This is a very good, I know this is wild and woolly. Here's a commercial. Let's get rid of that commercial. There we are. Now here you have, there's Roger Penrose, and the other fellow is, I forget, he's a PhD in this fellow right here. I believe he's what is he? He's a I think he's a Nobel, and Federico Fagan meet to discuss their ideas on the relationship between quantum physics and consciousness, with special participation by Bernardo Kastrup. That's who it is. Well, Bernardo, let's see what Bernardo is. I think he's a biologist. Bernardo, implications, I think he's a computer scientist and a biologist, or plays with both of them. And so, it's an interesting concept when you know about physiology and the way information is communicated through physiology, the spine, and what is it called? The different sparks. What do they call it? I can't think of the name of it at the moment. I'm losing my mind a little bit here, but it's all there. In other words, it's fascinating stuff. Penrose is looking at it, and he's thinking it's the ganglia that communicate in our spine, that communicate with our mind through our nerve systems, and certain parts of the brain seem to pick up information faster before it actually makes it to our frontal lobe. So that's why sometimes you are able to predict things before they happen. Taking a sip of my coffee there. So yeah, it's fun stuff. Let's put it that way. It's definitely fun stuff. Now let's minimize that again. Here's our beta platform right here. Like I said, that's what we're trying to graduate to from our older platform right here, this one. And we're doing lots of back testing and math and making sure it works, and the whole thing. But it's definitely mind-blowing. There's no doubt about it. It's fascinating stuff. Totally fascinating. And there is no better way to look at it than that it is mind-blowing. Because you're looking at the fundamentals of existence and how it meets. Not only does it meet in the subatomic world, but it's meeting in the physical world now, what we'd like to refer to as the friction world, in the real world right now, and so, and you can see how it has an effect not only on, just markets, it has an effect on everything, and we're seeing it there. Real time, yep, exactly. Yep, exactly. So, there's cable. You can see how the Fibonacci sequence matches with our mathematics, and you can see, like, here's a good one. It bounces off the extreme of 0.23, tries to bounce again. We get that buy right there, and starts to peak out again, almost taking out the high here, and then rolls over and goes into the sell here. And you can see we've been playing our way down. So no, I agree with you. The you can combine these things together and massage them. There's lots of tools. We created a tool for Ducoscopy, where it had a combination of slow stochastic against a fast stochastic that worked way more efficiently than a MACD, and that's the magic of it all. Wow. Okay. All right. So from there, that's interesting. Okay. Yeah. So the PPI came out. It's not having much of an effect. Let's see if we can see it right there. Now we're getting ready to switch. This is the back month. I mean, this is the front month, which is going to be the back month very soon. And you can see here, let's just move that down. Now this is intraday charts using our math same way, right there. And you can see in this case here, we don't really use the dots or anything with it. We just leave them up there for the fun of it. But you can see it goes into the buy right there, and you get your action up. And then this is, we can even show you a faster one like this one right here. You can see it ticking away even faster. You went into the buy right here, and it's pushing along, and you can see it goes into the sell right here. It pushes down, and there's a sell right there, it pushes down. There's a buy right there, it pushes up. This is the intraday to it. So a lot of fun here. All right, and from there, where were we? We were at the currencies. So let's go back to the currencies. Unless someone wants to see something, anybody out there wants to see something with our interpretation through the math and the Fibonacci sequence, just shout it out. From there, we'll go to the yen. There's the yen. It popped into the buy yesterday, but it looks like it's trying to push itself back into the sell here. At the same time, you can't take the long Y traders because we're in a weekly sell. Not only that, even the fast is still in a weekly sell. So as much as it became oversold here and tried to bounce up as it did, and then it tried to do it again here, keep on climbing, it's failing and it's breaking down. And now it's trapped inside the manifold on the negative side because these are mirror images of each other, of a standard deviation with our math. So these manifolds that I call, these objects I call manifolds here, are a standard deviation using our mathematical formula combined together, putting a deviation on our math together. So in other words, if we go and throw a Fibonacci sequence in, let's see if we can do this. Study, let's see, Bollinger Band. I guess that's it right there, Bollinger Bands. I'll just say okay. And there you go right there. Notice they have somewhat of a similar look to them. But notice we hit that and ours starts to top out. Bollinger Bands start to break down. You see we go into a daily buy here. And so even with it down in here, coming off the band, we're already, we're jumping into the buy. And in this case here, the weekly is telling us, no, don't trust it. And, because it stays in the weekly sell. But here's the Bollinger Band, slowly drifting down throughout this whole weekly sell. Whereas we went into the weekly sell here, the Bollinger Band starts to curve here. You can see the price broke down and it was hugging the sell side. And you're trying to figure out when to buy. And obviously we get a daily buy here, so you know that this is the one you can buy. That's how we combined our math with other tools to be able to say, see, we're ahead of the curve. Again, matter of fact, in the very beginning, I used to call it algorithms, algo wars. I remember it was a Gitta used to say, she'd go, no, do we have to call it a war? I said, no, it's a battle between one technician and another. It's technical wars, technical analysis battles. Who has the better technical analysis? That's what I wanted. I was hoping. And we got a couple of people that would challenge us, but no one seemed to rise to the real occasion, the real battle there. All right, from there we'll go take a look at the Great Experiment. You can see here, they've been buying the currency there. Remember, when this goes up, it's losing against the euro. When it's going down, it's gaining. You see the fast is breaking down, almost touching to the negative side of the manifold itself. Underneath the zero line. We've been what's on the spreadsheet when it comes to the Turkish lira. Right there, we are now. Where is it at? Right there. 18 weeks now. We're heading for half a year. What do we need? 5 more weeks? 3 more weeks? What's it? 27? I guess it's 27. So this week will be 19. So we have 8 more weeks, and we'll be able to say that this product has been in a weekly sell for half a year. It's not that surprising with this product. The great experiment has a natural tendency to run in long runs. It can go 15, 20, 25, 30, 40. We've seen 54 weeks. We've seen 52 weeks in a weekly sell. We've seen 49. We've seen 48. We've seen over the last 11 years, we've seen some really tough time periods on the product. It's gone from 1 to 40. It looks like the currency that shall not be named, the ruble. It's like Voldemort in Harry Potter. we call the ruble. The ruble is Voldemort, and when you can't say his name, if you say his name, he knows where you're at. So he has a spell out there that's why they used to say, "He who shall not be named," because if you say his name, he knows where you are, and he may come and kill you. Yeah, and so in this case here, the ruble is the currency of that shall not be named because it might do bad things to you. Unfortunately, someday that country is going to clean itself up and it's going to be a very productive country. But right now, it's still trapped in the ghost of Soviet Union, seems like. All right, from there we go over and look at the South African rand right there. You can see the rand seems to be trapped in this situation here. I don't think it wants to go take out the high here. Maybe if it's going to do anything, maybe it'll go revisit the triangle. But I kind of doubt that. I kind of think that it, and as this triangle up here keeps on going, what's going to be interesting over time is when they meet, when these two meet, that might be the next big top, not the bottom. I have a lot of faith that this coalition government might clean up South Africa, get rid of the ghost of Nelson Mandela and the communists. That definitely really trashed the economy there. That's what happens when you allow illegal aliens to vote in your elections. That's what apartheid was all about, the half vote for illegal aliens. And so Zulus and one of the other native people to the area had full votes. And so it wasn't racism, or they wouldn't have had full votes. It was they gave the vote to illegal immigrants, and it really crushed them. And then the world of media pretended that it was racism when it wasn't. And so that's what we have going on here now, is that it looks like they're going to be getting rid of the ghost of Nelson Mandela, and maybe civility and prosperity will come back to South Africa. All right, and so now the new government is a combination of the Zulu nation, the old Afrikaners that were conservatives, and the ANC. So, it's a coalition government. So we might see some positiveness. That's why it came down like that once the elections were over with. So, all right, and so with the South African currency, we find that the metals complex follows it. So as this thing has been going down, gold right here has been finding ways to be up. Nope, that is commodities, or that's grains. So let's go right there. There we are. And there's the gold, and it's been going up in price, coming from the $24 area up to the 25. Where's it at now? Right now, 20. Right now, last trade is 25.59. And it played today with the all-time high, I believe. There's the all-time high of 2570. And today's high is 2572. So it made a new all-time high right there today. Fascinating. Simply fascinating. You know what we like to do is, I'm having so much fun. I would love to see what an intraday chart looks like with the gold. So let's do that. Let's see which one we can use. So let's go with this one. I'll make a copy of it and put gold in there. Copy window. Paste window. Did it do it? Yep, that did it. Now, let me just see where it's at. Down at the bottom. We'll go like that. Like that. And put in GC. There it is. And let's see how that goes. Now, I haven't looked at an intraday gold chart in a long while because I don't really drift around that much. If anything, I'll just do a bull spread or a bear spread type of thing in it. And let me see how many days back it's going. Let's make it 2. There we are. So went into the buy right. Let's use a line. It's always easier to do a line instead of me poking at it. Went into the buy, and let's make that line white. Like that. Went into the buy there. Went into the sell there. Did it go into the buy? Went back into the buy right there. Went right back into the sell again right there. And now looks like it's going to be going into the buy right there. If it closes there. And we got 92, 86, 77. We're getting very close to the new bar. 55, 33, 28. That's why we do spatial charts. And there's a new bar. Did it make it into the buy? And the answer to that is yes, it's in a buy. It went into the buy right there. Still in the buy right there. Still in the buy right there. Can you imagine how tough it is for it to go climb up to another all-time high, which is 11. Now it's only 10 points away from an all-time high. It's moving up as we speak about that back to another all-time high. Maybe it'll hit this. Now, I guess we got a Bollinger Band on there too at the same time. Someone must have asked us for it, and I probably put it up there. Now it's only like, what is that, $9 away from an all-time high. Keeps on climbing. And we're in the buy. See if it hits the white line in here. The moving average, it's at 63, 64. I guess that's 65 in it. So it needs to get through 64 here. You're seeing it live trading right now. This is live trading. Fun times as always around here, eh? All right, got the new phone. This is the last day. I should have to put the title in on the chat line. We got to just download, WhatsApp. That's what we have to do. So here is the title today, and that is, we're going to go with Chris, and we're going to put Fibonacci paste Fibonacci and docs math. There we are. And that's the title. All right, traders, we're out of here. This is Doc from North America, watching gold, only $6 away from, is it $6? Let's see, $6 away from an all-time high again. So this is Doc from North America saying, happy trails to you until we meet again. Happy trails. Got to move that over 1, 2, don't we? Come on, move over. There we are. Happy trails to you, to all our trading friends. Thank you, Chris. Thank you, Robin. And thank you, Dukascopy traders. Catch you tomorrow, same time, same channel. Actually, what's tomorrow? TGIF, right? End of the week. Thank goodness it's Friday. So, arrivederci to all, and to all, arrivederci.